All right, let's get to our stock of the day. And that is a Woodside Petroleum. It's committing to invest $5 billion in new energy products by 2030 as it aims to cut emissions and tap into cleaner sources of fuel. And yesterday, the company is saying it will expand its hydrogen portfolio and solar projects in the US. This comes after the company and BHP gave the final go-ahead to their $12 billion LNG project last month. So what do our experts think? Michael, Woodside should probably be dropping the petroleum from their name, shouldn't they? I guess they have in some quarters. But how are you seeing this this outlook from the company?
I think it's a bit of semantics, really. They're obviously still very much a LNG energy-based company. The merger with BHP, I think, is a blessing for this company. Essentially, Woodside had some very high-quality assets with the cost of production in the lower quartile globally. However, the life of those assets was quite short, and that's what was really concerning the market there for some time. So although they were conservative, their growth profile looked pretty average. The merger with the petroleum division of BHP certainly gives them a bit more geographical diversification. It also enhances their potential earnings power going forward. So there is a lot to like about that merger for Woodside shareholders, of which I'm not one and neither are clients of ours. They made a decision a few weeks back to go ahead and maintain their full 100% ownership of the Scarborough project. That's an okay project. The internal rates of return are estimated at about 14%. So it's not a huge returner, but it does give them longer production life, and that's something that the market, I think, does not mind. However, look, on an internal rate of return, doesn't leave a lot of margin for when things do take a bit of a hiccup. So look, for mine, it's a decent quality exposure to the energy space. We have a little bit of exposure through Oil Search and Santos, and now that merger's going through because we prefer the growth trajectory of those companies. We still probably do prefer those two opportunities, or now Santos, but we have been sort of reducing those positions as well now that the oil price has recovered sort of over the last 12 months or so. So we're pretty neutral on the oil price from here. You would think that if the market and the global economy continue to roar ahead, energy should do well, but ultimately OPEC still has a lot to say with these sorts of things, as does the shale oil producers in the US and what Biden does there with his spare reserves.
So if it was in your portfolio, would you be holding it?
Oh, look, I am a seller of Woodside, only because I prefer others, and it'll be a bit wrong of me to say it's a buy or a hold for that reason. You could do worse, but it is a safer option and exposure to the energy space.
All right, Andrew, it's foray into renewables. Do you find that attractive?
No, not at all. I don't find anything attractive about this business.
Okay.
Well, I mean, let's put opinion aside and let's just talk about facts. You know, the revenues have dropped by a third in the last decade. Shares have only been heading down since 2008. Dividends have gone nowhere for as long as I can remember. And even with that you're getting a 5% yield. It's got really volatile earnings. The return on capital, the return on equity, whatever profitability metric you want to do, it's awful. It's sort of around the mid-single digit kind of range. There's zero pricing power, massively capital intensive, and it's bad for the environment. You know, it's kind of like, if you're at least going to rape and pillage our natural environment, at least make some money for shareholders while you're doing it. They haven't done that. So hope springs eternal. Maybe the future will be different. But I just find that, you know, this idea that as an investor, you must have exposure to this sector and that, I would ask why? Why? And this is the biggest sort of player in its space in our market. And that's what it's done with all of the advantages that it has. And people talk about how wonderfully high quality the assets are. I was like, show me the money. It's not there. And so, you know, I kind of feel as though, I'm really glad Michael said pass, because I was really prepared to put the boot into this. And I think I've done that. But I mean, I'm really open to having my mind changed here. But those facts are not, you know, the company's not covering itself in glory here. And I've just got to wonder, why is the future going to be so very different from the past when we're going into this very dramatic structural shift for the global energy mix? And yeah, LNG will play an important part in the transition, and yeah. But it's not as if there are strong tailwinds behind this sector. And so they can greenwash it if they want, and they can do other kinds of things. But this is a very low returning company that has delivered really sub par inadequate returns for shareholders for as long as I can remember. Hard pass.
All right, our big avoid. Thanks, Andrew.